we sit in the middle? Good turnout. Great. Ladies and gentlemen, good afternoon. Thank you very much indeed for dragging yourselves away from lunch. This proves to be, I hope, a very interesting and insightful session with my new friend John Bruton here alongside me. John was, of course, is, of course, the former Taoiseach Prime Minister of Ireland from 1994 to 1997. As you heard on our way in, it gives me a great pleasure, therefore, to moderate this session. John really needs nothing in the way of introduction. He has a long and very distinguished career, both politically and diplomatic, and that's included far more than his former Irish premiership, a career that I'm sure he won't mind me mentioning now spans almost half a century, and as you can see next to me today, he's still going very, very strong. John was first elected, pardon my pronunciation, John was first elected to the Dáil Éireann, the lower house of Parliament in Ireland, as a TD, a Member of Parliament, for the Meath constituency back in 1969, and has served continuously until his retirement from domestic politics in 2004. He then served as the ambassador of the European Union to the United States from 2004 to 2009, and is a former vice president of the European People's Party. So as you can see, a wealth of experience and insight awaits us over the next 45 minutes. And since November of 2011, John's acted as an advisor to the Fair Observer publication, the independent non-profit media organization, as they quote, that engages in citizen journalism and civic education. I'm hoping we're going to do some of that this afternoon as well, with his focus being mainly on politics, finance, and economics, as well as on issues pertaining to Europe. We may well just use that word Brexit before the end of the afternoon as well. So ladies and gentlemen, it gives me great pleasure to welcome John Bruton to the stage. Please welcome him here this afternoon. Thank you. So John, perhaps we could start close to home, here in the UAE and in particular Dubai, and touch on the region's diversification story and the recent economic successes, the economic challenges that we continue to face in this region. You, of course, have got years of experience and deep understanding of Ireland's transformation from the equivalent of a frontier market back in the 1960s to the modern developed economic nation that it is today. Could you perhaps share with the audience, what lessons were learned by Ireland, should I say, that this region should be cognizant of looking ahead, both in terms of successes and mistakes made along the way, and just give us some direction from here as far as you might see it.
Thank you very much. And Simon, first of all, I'd like to congratulate you on your excellent pronunciation of the Gaelic language. I think there are some lessons that can be learned from the Irish experience, as no doubt Ireland could learn from other countries. We gained our independence from Britain in the early 1920s, and we inherited a good system of rule of law, a good civil service that was independent of politics, and a good court system. However, we were very poor as a country, and we had focused only on really one big product, which was agricultural production. And we didn't diversify our economy soon enough. And then in the 1930s, we introduced protectionism. And Ireland was, if you like, behind a protectionist wall, which held us back right up until the mid-1960s. In the mid-1960s, we initiated the reforms in what was then a frontier economy that have turned it into one of the most developed countries in Europe today. The reforms included, first of all, a tax regime that encouraged foreign direct investment, low corporate taxation, complete freedom to repatriate profits, no attempt by the government to regulate what business might do. We also introduced free second-level education, which had been done in other European countries in the 40s, but not done in Ireland until the 1960s. So this made the combination of a young educated workforce coming into the workforce in the 60s with a policy of attracting foreign direct investment, which reversed a previous policy of being hostile to foreign direct investment, created a major opportunity for Ireland. We also, comparatively speaking, had a stable currency, and I know that devaluations and revaluations are one of the things that one worries about in frontier economies. Ireland, in the first instance, had a one-to-one parity with the British pound. Then we decided we were going to join the European monetary system, which detached us from the pound and created some devaluations, which were not a great experience for us. But when the euro was formed, and Ireland was part of the euro, we had, of course, as all countries in the euro have today, complete currency exchange rate stability. And that exchange rate stability, combined with low taxation, combined with the availability of a well-educated workforce, enabled the Irish economy to transform itself over maybe 15, 20 to 30 years into a very modern economy. Now, obviously, we have continuing reforms to make. One of the things that we did get right in the 1990s was people being encouraged to pay their taxes. There'd been a rather lax attitude to the payment of taxation in Ireland from the time our state was founded until the 80s and the 90s. But then, through a combination of policies of a tax amnesty, where there was no penalties and no interest to be charged on money owed to the revenue that was declared before a certain date, that was then accompanied by much more severe penalties for any evasion of tax that was discovered after that date. That created a tax-compliant society. And in many ways, Ireland is a completely different country than that which it was when I was growing up in respect of this attitude to paying your taxes. I think looking at the frontier economies that the investors here are looking at, something along those lines is possibly necessary in some of them, that the tax revenues are either not being paid at all, or if they are being paid, they're being diverted to places that they shouldn't be diverted to, that they're not being used for genuine public purposes. Those, I think, are a few of the lessons that could be learned from Ireland's comparative success, but we've got to continue to be vigilant.
I guess, at least here in this region, listening to those key sort of bases for moving forward from a frontier market. We've obviously got the stable currency thanks to the dollar peg, which seems fairly solid for the foreseeable future. We've got a low, sort of a young and sort of energetic Emirati as well as expat workforce, and we've also got I don't know what the third one was that you mentioned, but levels of growth in the region for the time being as well. Okay, thank you. Okay, so let's move on a little then, if we could, and perhaps ask you to share with the audience what you perceive to be the necessary criteria that we should use to identify frontier markets that have the potential to become fully developed economies within the next 10, 15, 25 years perhaps. And I'd pose the question, can frontier markets be viewed and analysed alongside each other, or do we need to approach them with a degree of individuality, a sort of idiosyncratic analysis?
Well, I have some problems understanding the category of frontier markets. BlackRock, for instance, lists countries as diverse as Croatia and Estonia, and Lebanon and Nigeria all together in the category of frontier markets. Now, these four countries have very little in common. Well, Croatia and Estonia do to some extent, but the others on the BlackRock list are so diverse that it's very hard to generalize about them. I think it's probably the case that frontier markets are basically not fully developed economies and not the BRICS, the big emerging economies like China and India and so forth. They're the other economies that have varying degrees of potential, that are investable. Now, what makes a frontier economy investable? Clearly, an independent court system, political stability. If you have great political instability, you're not going to invest in that country. I think you also need to have decent education, or at least the prospect of decent education coming downstream, so that you will be able to recruit locally. And you need to have robust arrangements to combat insider trading, to ensure that minority shareholders are protected, and that your investment, particularly if you're going in as a minority shareholder, is protected. Where do frontier markets shine? They shine, I suppose, in the sense that you can get a bigger yield in a frontier market than you can in an emerging or a developed market. Substantially bigger yield. There's a risk premium. So obviously the type of investor that should be looking to frontier markets are people who are looking for a capital gain or a potential capital gain, rather than those who are looking for a steady, reliable income. They should probably go elsewhere for that. I think in assessing frontier markets, one should use not comparisons of the GDP, which just measures income, whether that income is depleting resources or is income that is renewable. One should look instead at the balance sheet of the country. Not just at their balance sheet that is counted by money, and oil reserves, for example, can be counted in financial terms. Not those items in the balance sheet alone, but also the sunlight, the water, the wind, those natural resources that are capable of generating sustainable energy and sustainable production. You need to look at those aspects of a country's balance sheet, its environment, how well protected is its environment, how susceptible is it to flooding and rising water levels. Mangrove swamps apparently are an important asset for a country to have to prevent flooding from on shore. And if a country has depleted those mangrove swamps, that's to its disadvantage. If it has maintained them, that's to its advantage. I think it is important also to say that frontier markets are attractive as an opportunity for diversification. The whole business of investing is about spreading risk so as to protect wealth. At least for many people, that's the goal. And frontier markets should be part of any diversification process.
Perfect, thank you. I think that follows on very nicely from the panel that I was involved in this morning. We were looking at regulation and reform and the necessary next steps in order to try and solidify the diversification story here within the UAE and across the GCC more generally. So, yeah, thank you for those insights, John. Of course, in this region, there's a long-standing focus on the natural resources that you've just alluded to, and in particular oil. So, how would you view the role of natural commodities in determining frontier markets' relative dependence, if you wish, of depleting natural resources as a means of maintaining living standards? And within this, what do you think is the impact of you touched on climate change there just earlier, but what do you think is the impact of climate change on frontier markets' credit profiles? I mean, how important in the context of COP26 for the last couple of weeks up in Glasgow in Scotland? I mean, how do we sort of balance the outlook with climate change?
Well, if you're taking the approach that I would suggest we should take of looking at the balance sheet of a country, you have to evaluate that balance sheet in terms of its long-term economic potential. Now, to the extent that the promises that were made in Glasgow about diverting to renewable energy are concerned and being more sustainable, obviously assets in the form of coal are less valuable and will become even less valuable than they were in the past. Assets in the form of oil reserves will become less valuable. Assets in the form of natural gas, to a degree as well, will become somewhat less valuable, although I think they have a longer lifespan than the other two fossil fuels. So I think that's important. It's important also to recognize that reliance on natural resources is not evenly divided around the world. The poorest countries in the world tend to be the ones that are most reliant on natural resources. 23% of all the wealth of less developed countries, according to the World Bank, is in the form of natural resources. In the case of some developed countries, that would only be 1 or 2% in their case. And I think it is important to recognize that, however, we don't know how effective all of the promises that were made by governments at COP in Glasgow, how effective governments will be in implementing those. I was listening to the session this morning by Matthew Griffin, and he said something that I didn't agree with. Most of what he said I agreed very much with. But he talked about governments becoming irrelevant, and that somehow or other the private sector with technological advance was going to solve all the problems. Now, I don't want to spoil the tremendous feeling of optimism that I myself felt having listened to him, and that I'm sure all the others who listened to him will also have felt. But the sad reality of it is that it's governments that start wars. And if you look around the world today at countries that are furthest below their potential in terms of their achievement, it is countries in which there have been or still are major wars taking place. Also, I think it's fair to say, and this would be true of Ireland's economic success, one of the reasons we did succeed was because we were a small and patriotic country. We had won our independence with great difficulty, and we were proud of our independence. We didn't make much of our independence for the first 40 or so years, but the patriotism that was created in winning our independence was still there. And that patriotism, that sense of being willing to go the extra mile to help a fellow Irishman in achieving his or her economic goal, was something that worked to our advantage when the good times came. And I think it is fair to say that patriotism is important to economic success, and patriotism is something that cannot be created by corporations. People are not going to go out and die in war to defend Apple. They may go and do so to defend the United States of America, or the United Arab Emirates, or Ireland, or some other country. That states are still a very important part, and therefore politics is very important. Governance in politics is very important. Now, I totally agree with those who would say corporate governance is very important, and corporate governance is going to have to, in future, take into account all sorts of issues like environmental, social factors, ESG, that we've been referring to. And that's going to be a huge challenge for corporate governance, because the possibilities for greenwashing, for fraudulent reporting and so forth are immense. And there's going to be a posse of policemen putting directors under the microscope if their ESG promises are not genuine. But the same need for good governance applies in politics. And one must ask oneself, are we selecting the best people to go into politics? Is the level of criticism that's endured by politicians in many democratic countries, and indeed in some less democratic countries, that the level of criticism is just too severe, that it will discourage people from going into politics and to find some other safer way of making a living? So these are all considerations, I think, that need to be taken into account, and we need to look at the design of the optimum designs for the constitutions of states to ensure that they get the best people and do the best things.
Perfect. Now, when I heard the comment this morning about governments being optional alongside the private sector, I knew that might be something that you'd grab hold of and have a view on this afternoon, so thank you. Next question that I had here was, what is the importance of we talked this morning as well about the young and expanding population here within the UAE across the GCC, the need for population growth, for economic growth over the medium to longer term. So in your view, from your political and diplomatic career, I mean, the importance, how do you see the importance of human capital in the economic development of frontier markets, of the island story, if you wish, over the last 50 years? And critically, I guess the question has to be, what socio-economic structures do we need to have in place? And again, we were talking about reform and regulation earlier on this morning, but what sort of socio-economic structures do we need to have in place as part of the, the long-term development process for this region and more generally for frontier markets, if we were having that discussion?
My sense is that of all the forms of wealth that the United Arab Emirates or the Gulf or other countries in this region have, the most important form of wealth that they have is their people. Unlike the countries of Northern Europe, countries here have a young population. Young people, by their nature, are more innovative. Young people are more willing to experiment, more willing to take risks than older people are. They're also stronger, their brains are stronger, their bodies are stronger. So that's a huge asset. Obviously, education of young people is key. Now, I'm not an educator. I have been educated to some extent, but not enough, some would say. But I think we need to be very critical about the form of education we're giving. Are we educating people to know more and more about less and less, to get very narrow in their specialism? Or are we educating people to know enough but have the confidence to take risks, the confidence to lead other people in a new direction? Is the educational system innovative in its underlying spirit, or is it one which is, as sometimes one hears about academia, very critical and people, criticizing other academics for some small mistake in the footnotes in some paper they've produced, rather than looking at the general argument and whether the argument has validity? It's important that that characteristic is imparted through the educational system. I think it's also important to ask whether modern higher education is a form of restrictive practice. If one look at the fees that are charged and the debts that are incurred by young people and their families to go to some of the supposedly best universities in the world, and you ask yourself and analyze objectively what those people are learning in those places by comparison with what people are learning in, say, a run-of-the-mill public university in some other part of the world or in the same part of the world, and ask objectively, is the actual additional knowledge that's being obtained in these prestige, high-fee, high-debt institutions sufficiently greater than what might be obtained otherwise to justify the additional fees? I think you would be quite surprised by the results. And I do feel that with all of the advances in technology that have been referred to earlier today by Matthew Griffin, I think some of these higher education institutions that are charging very high fees are going to come under significant pressure, and new entrants to higher education, including new entrants to higher education potentially in the developing world or in frontier markets, using a more realistic model, charging more reasonable fees, using remote learning, using other systems of learning rather than living on the campus all the time at great expense, that there is room for new innovators to get in. But for that to be worthwhile, we've got to ensure that the certification of people's results is done independently. The university that's charging very large fees should not be the one that judges the quality of its own graduates. There should be an independent system for judging the competence that is obtained by people in attending schools. In my own country, for second-level education, we have something called the Leaving Certificate, which is entirely blind as to who it's examining. It doesn't matter what school they went to, everyone sits the same exam. And that's, I think, been a very good thing for us. That does not apply in Ireland at third level. In Ireland, at third level, if you've been to Trinity College, that's regarded as a good degree. If you've been to the college in Waterford, that's not regarded as a good degree, just on the basis of reputation, even though in practice the degree you get in Waterford might be even more valuable than the one you get in Trinity College. I think this is an issue that we need to examine, and I think the people to bring this sort of issue up are the emerging economies, including economies here in the Gulf.
I guess education is going to be a very interesting topic to follow generally over the next 5-10 years, particularly sort of post-pandemic, when many students have been paying those exorbitant, in inverted commas, fees to be at university, but being told stay at home and follow everything online. And there's been a sort of an element of regret or kickback, if you wish, against from students not wanting to or seeing the need to pay for those fees. And with the development of you and I probably less familiar with many of the social media technology bits and pieces that our kids are now using on a day-to-day basis, and so education's almost becoming more vocational, if you wish, in terms of that's where the skill set really lies in terms of being able to add value in the years to come, is through that technology rather than the written degrees that you've done, be it from Trinity or Cambridge or Oxford or wherever.
And it's going to be increasingly renewing your educational qualifications throughout your life, yep, rather than achieving it all in the first 25 years of life.
Yeah. So just as we're seeing the need for flexibility within this region from a diversification story, I think the education system globally really needs to go through a period of reflection and flexibility, if you wish, going forward to try and move with the times, as it were. Okay. The one question that I obviously was very keen to talk to you without sort of getting too emotional about it, as yourself from Ireland, myself originally from the other side of the water, as it were, is Brexit. Arguably, economic foresight or economic stupidity. Where would you put the Brexit solution?
Well, I think the first thing to say about Brexit is that it was a decision that had nothing to do with economics. There was a sense, I think, in England, and I think we must draw a distinction here between England and Great Britain and Northern Ireland. In England, there was a sense that it wasn't right, that rules that would apply in England would be made outside England. That, notwithstanding the fact that Britain had joined the European Union in 1973 and in the 1980s had pioneered the idea of there being a single European market where the same rules applied to the production of goods all over the 15 or 20 countries that were then in the European Union, including Britain, that there would be the same rules, and these rules would obviously have to be made collectively, not just in each of the 27 countries, but collectively. There was a sense in England that they didn't like this, that after all, England was the country that was the home of the mother of parliaments, and at one stage the British Parliament was, if you like, the parliament of an empire that stretched around the globe, and the idea that now people in Brussels, admittedly with British MEPs taking part, British ministers taking part, British commissioners on the European Commission taking part, but that laws would be made that apply in Britain that were being actually finalised in Brussels. That just didn't go down well. Now, of course, it didn't go down well because, in a sense, Britain had a sense of itself that was larger than Europe, whereas Europeans, continental Europeans, and indeed Irish people who hadn't the same large sense of themselves, and in the case of continental Europeans, had experienced two major wars on their territory, the First and Second World Wars. They wanted to create in the European Union a structure of peace where the countries of the European Union, whether it be 27 countries, were like boxers in a clinch. They were so close to one another that neither of them could get to swing a punch at the other. That was the idea, that make this common market with these common rules so that people will depend so much on one another that they could never fight again. Now, Britain had that sense to some extent, but hadn't actually been occupied during the war, so it didn't have it to the same intense extent that the French, the Italians, the Germans, and the Poles had it. So that's why there was always in Britain, unlike in the rest of the European Union, a sense of discomfort about being governed from Brussels. So when the recession came along and David Cameron was under pressure as Prime Minister, he made a promise that there would be a referendum on British membership of the European Union, thinking that, of course, Britain would vote to stay in the European Union and that he could persuade them of that, because he'd been quite persuasive in other respects previously. That gamble failed, and by a margin of 51 to 49%, the British people, the English people, decided to vote to leave. But this put pressure on the Union of the United Kingdom, because the Scots, who are a separate nation, they have a separate football team, separate flag, a very different accent, a different language, sense of themselves. They had voted to stay in the European Union. The people of Northern Ireland voted also to stay in the European Union. The people of Wales were more like England. So, in a way, this decision created, in getting out of one union, created a little bit more disunion within the existing union of the United Kingdom. Now, the issue is settled. Britain has left. But there is a remaining problem, and that is in regard to Northern Ireland. Because in Northern Ireland, you have the only land border of Britain with any other country in the world. Britain is an island with a little bit of another island attached, and that's Ireland. So the only land boundary that the UK has with the European Union is a 300-mile-long border with 200 crossings in rural Ireland. Now, it was decided early on, including by the British, that there would be no border controls on that border because it was impractical. It was such a long border. There's been such a tradition of smuggling in the past. There had been terrorism on that border as well in the past, and you didn't want smuggling to be providing a revenue stream for terrorists, which it would have done or could do yet. So the decision instead was to have such checks as would be needed to facilitate the fact that Northern Ireland would still be applying EU rules for certain goods. To avoid this border, that the checks would take place at the ports in Northern Ireland. There's really just at 2 ports in Northern Ireland. So that's, in a way, in terms of convenience, very convenient. Northern Ireland still is in the United Kingdom for tax, still is in the United Kingdom for services and all the regulation of its services, but for goods, which have to be checked at borders, it would still apply EU rules. Now the difficulty is that the United Kingdom wants to stop doing the checks that it agreed it would do when it left the European Union. And it has already broken one treaty with the European Union on that respect, and is being sued over that. And there's a worry that it's going to do the same again. So this has to be resolved. The difficulty, in a way, in resolving it is that being anti-Europe has actually got votes for Boris Johnson. And so far, he's able to gain support domestically by being anti-Europe and putting Labour under the spotlight, is the opposition party under the spotlight, that they're not as anti-Europe as I am, and therefore you should vote for me, sort of attitude. Now that has worked for him politically up to now, but I think with shortages and long queues and people not being able to hire workers from Europe anymore, that may begin to change. I hope that Boris Johnson will change his course, but if he doesn't, we could have a trade war between the United Kingdom, one NATO ally, and the European Union, the majority of countries, whose countries are also NATO allies of the United States. That division within the Western Alliance, which would result from a trade war over customs posts in 2 ports in Northern Ireland, could have major ramifications for investment in Britain, for investment in Ireland, and even for investment in the European Union. It's a completely avoidable and unnecessary row that should be avoided.
It's a very sobering thought, and obviously something that would have a big impact, I guess, from an investor's perspective on the currency as well, both sterling and the euro in the short term. So, thank you. I think the UK probably went into that Brexit negotiation back in the early days, and it always viewed Europe as a dating partner. It wanted to go out for dinner and have fun, but never really wanted to consider marriage, and that was always going to be the long-term problem, because the bride always wants to get, or the girlfriend always wants to get married eventually. And that was never going to happen as far as the UK was concerned, and here we are now talking about Brexit subsequent to that. Perhaps we can just move across into Europe, because I know sort of clients that I speak to here in the region, great interest in what's developing within Europe itself, and I know you're obviously a long-standing expert on the region. We've got a change potentially a change at the head of the FOMC coming to be announced in the next couple of days between Mr. Powell, the incumbent, and Ms. Brainerd. But within Germany as well, obviously, there's the transition out of the Merkel era, which most of us have known nothing else but the Merkel era over the last 20 years. How do you see that impacting the European story, the Eurozone story? Most importantly, I guess, relationships with Mr. Macron, who's very much sort of still grand plan supporter out of France. How do you see the evolution of the European story going over the next 3-5 years under the new German leader?
Well, the euro has weakened a little bit in the last few days, but I think that's more to do with the policy of the European Central Bank of maintaining easy money for probably longer than either the Bank of England or the Fed is likely to maintain it. I don't think it's as a result of the possible Brexit row that I was referring to earlier, or other factors. I think there will be relatively little change in the approach of the German government as a result of the replacement of Angela Merkel by Olaf Scholz. To my mind, he's been a minister in her government. He understands Germany's fundamental interests. And Germany is very strongly in favour of sustaining the European Union, because Germany sees the European Union as a means of ensuring that Germany is surrounded by friends. It has an understanding of its own history, going back to the First and Second World Wars, that whenever Germany is on a border with countries who are not favourable to Germany, that there's the risk of war, and indeed the risk of war caused by Germany itself. So in a sense, the European Union for Germany is a way of self-control, a way of merging its demons, if you like, in something much deeper and more benign that makes sure that Germany never gets into conflict again. And I'm confident that has worked and will work. In the case of France, it's slightly different. I think France tends to see the European Union as a means of projecting French power. It sees the European Union as as France writ large. And that's a bit problematic. France is a very important country. It is a nuclear power. It has a good army, as Britain has too. But I don't think the European Union is now too big to be capable of just being a form of projection of French power. So what I think we're going to be looking in a way to other players in Europe. Italy, led by Mario Draghi. I think Italy is a country that's probably going to play a bigger role in the European Union. It's beginning to get its own internal economic problems and necessary reforms underway. I think it will be stronger and will support Germany. There are problems, of course, with the relationship between two Eastern European countries, Poland and Hungary, where in the case of Hungary, we're seeing some of the fundaments of the European Union, the rule of law, freedom of the press, and fairness in political contests being undermined by reforms introduced by the Prime Minister, Viktor Orban. And to a lesser extent, we're seeing a similar problem in Poland, where the Polish government, the present Polish government, sees the Polish judiciary as being holdovers from a previous communist-inspired regime and people who should be cleared out of the system. Now, the general view is that the Polish government is mistaken in this, that these judges are just doing their job, and they're not doing it because they were appointed under a previous government. They're doing it because they're interpreting the law. But this is a potentially quite serious challenge for the European Union, because the fundamental values of the European Union include the rule of law. And I think Europe will go to great lengths to ensure that neither Poland nor Hungary nor any other country flouts the rule of law or flouts the fact that in interpreting EU law, the European Court of Justice has to be the final arbiter, not national courts. That's fundamental. And I think that there is potentially a major conflict in Europe on that. On the other hand, the European Union has made substantial advances recently in that it has now acquired the capacity to borrow to promote economic recovery post-COVID, something that I suppose would never have been allowed if Britain was still in the European Union, because Britain would have blocked it. So if you like, for the European Union, the fact that it now has the power to borrow is the first dividend of Brexit, even though we deeply regret Brexit.
Okay, fantastic. I appreciate we've got a couple of minutes left, so I'm trying to think how to wrap this up. Obviously, 2022, there's a lot of optimism, obviously already being priced into the market, thanks to central banks around the world having slashed interest rates to zero. The vaccine, which has obviously been a game changer for the world over the last 18 months, post-pandemic or post-Q2 of Q1, Q2 of 2020. As far as 2022 is concerned, 2023, would you have any key takeaways for the audience here in terms of frontier markets, the outlook, how you see the world, anything you'd like to convey in terms of thoughts and ideas for us as we try to sort of see our way through this sort of gradual level of moving from recession to positive growth this year, and probably a slowing level of growth in 2023.
I was very interested in the discussion earlier this morning at this conference here about inflation, where one of the participants was suggesting that this is definitely going to be a short-term phenomenon, and that by the middle of next year, inflation would be tapering off, and others were less optimistic. I suppose it's a bit in my nature not to be particularly optimistic, and I do see substantial problems for certain parts of the world as far as inflation is concerned. Inflation, as it is happening, and disruptions of supply chains as they are happening, and the increases in freight charges and shipping charges as they are happening, are not having the same effect on everyone. If you're an island economy, you're going to be hit and are being hit much harder by higher freight charges. If you're a poor economy that's exporting a few commodities, you're going to be hit much harder by this rise in inflation. So I think the differential effect is going to be substantial. And the only agent that is capable of redistributing the burdens that inflation will impose, because the burdens will not fall evenly. Some people will gain from inflation, just as some people have gained from the increase in asset prices caused by quantitative easing, while others have lost. Those who can't get a house, those who are in more difficult circumstances. The only agent that can, if you like, redistribute the burden and maintain social peace are not corporations, they're governments. So we need governments. We need governments that are competent, governments that are not swayed unduly by popular opinion, but try to do what's right in the medium term. None of us can foresee the long term, but if you can try and do what's right in the medium term, that I think should be a good guide for governments, and we need to support governments in doing this very difficult job and recognise that they need our support.
On that note, we'll call that a conclusion. Thank you very much, John. Let's end on that positive note. Governments being supportive and giving us their back, as it were, over the recovery period. John, it's been a pleasure. Thank you very much indeed for your time.
Thank you.
Ladies and gentlemen, Mr. John Bruton.